Good evening, good morning, good afternoon, depends on when you're watching. Welcome to another Smokin Bulls podcast. My name is Tyler Cobain, and I'm here with Dave. And we're joined today by a couple of gentlemen from Maple Leaf Flow Through Shares, Maple Leaf Funds. We've talked about flow through shares on our podcast a bit in the past, but we're going to dive a lot more deeply into them today to find out how they fit in your portfolio and some of the tax advantages that can be achieved by using them. So before we go any further, let's get into it. So we want to welcome to the podcast today, Mr. Scott Jeffery and Mr. Shane Doyle. Shane, I think, is going to be speaking a great deal today about the Maple Leaf Funds flow through shares. And I don't want to butcher any introductions, so I'd like to turn it over to you guys. And first off, thank you very much for being here. Maybe you guys can take a minute and describe who Maple Leaf Funds are and maybe a little bit about yourselves before we jump into some of the meat and bones of the conversation today.
No, absolutely. And we really appreciate you having us on, Tyler and Dave. We're thrilled about the opportunity to discuss flow through. We always are. And I can give you a bit of an overview on who we are and where we came from. We started Maple Leaf Flow Through back in 2006 as a flow through into the natural gas space. And flow through, just as a background, has been basically building our resource industry in Canada from the grassroots since the 1950s. And it played a predominant role in building out the oil and gas industry because back in the 1950s, companies were looking for money for exploration in the Alberta oil patch. And flow through was a primary financer of these exploration programs. And the money that was raised went in to developing out a lot of the pools that we're seeing today, or probably have already been dried up by now. But there's been, I'd say, billions of dollars of money raised in the finance world for these exploration projects, and that the government realized that, hey, this is fantastic. And they started migrating it over to the other resources. And those resources have been oil, gas, gold, silver, copper, uranium, aluminum, potash, like basically all the building block resources that this country has built itself on. And the heyday of flow through was in the early 2003, 4, 5, and 6, right up until Halloween of 2006, when the federal government did away with income trusts. Because most of the projects that were getting a lot of money were the oil and gas companies that became income trusts in 2003, 4, 5, and 6. And when that was eliminated, it really put an impact on the ability for companies to raise money for flow through. So flow through went from like a $4 or $5 billion a year business down to a $1 billion a year business, and it's starting to get traction again. And we've been, since 2006, growing and growing and growing our footprint in the Canadian marketplace for flow through, and we're now the largest flow through generator of income in the country. We do 2 prospectuses a year. We raise money coast to coast from the investment world who want to participate in the exploration of the resource projects. And those resource projects now have been limited since 2017 to mining. And our focus since 2022 has been in critical minerals. And there's a few reasons for that, but the primary reason why we're going into critical minerals is because this is what basically Canada and for a lesser degree the world actually needs. And when you think of critical minerals, some people think rare earths. It's not. What it really is, it's the building block metals. It's the copper, it's the nickel, it's the zinc, it's the aluminum, it's the uranium, it's the iron ore. It is the metals that we really need to build out our infrastructure. And we've been doing a lot of, I would say, education nationwide since 2022 on this concept, and we're starting to get a lot of positive reactions to it now. We're raising as much money as we can place, I think, in really good quality exploration projects right across the country. And that is what we're talking about today, is we're trying to continue to grow the the exploration leading to development of some of the better quality projects that we have available in Canada. And when we do that, everybody in Canada actually takes advantage of it, because it does build our roads, it does build our schools, it does build our hospitals, it does build our public transportation. It's really important that we get after these minerals, and then the economic benefits are massive for the country, because we start accessing more and more pools of resources that create a lot of jobs, create a lot of royalties, create a lot of income for the country. A lot of taxation comes out of that. So, it's a really strong program, and we want people to understand, basically from the grassroots level, what we're actually trying to achieve here.
Did I hear you right, Shane? Did you say that flow-through shares are now limited to just the mining operations?
That's correct. Since 2017, the Trudeau government has eliminated oil and gas as flow-through available for investing. So it was quite shocking for us. We've been investing in the oil and gas industry, since 2006, and then it was completely eliminated. But luckily for us, we have a portfolio manager who built their business and their their entire portfolio investing in mining in primarily four provinces, the Western provinces and Quebec. And that's where we raise most of the money for our programs, and that's where we place most of the money for our programs. So we're well looked after from a portfolio management perspective. We're just a little bit disappointed that we lost oil and gas as a opportunity for our investment dollars.
I'm sure oil and gas is disappointed as well.
Yeah. Well, and I think you can see a little bit of it. I mean, I think the oil and gas industry has moved away from conventional oil and gas, as the mainstream part, to mostly oil sands. Now you see a lot of the money being earmarked for northern oil sands projects. It's good growth business, but for it has impacted the conventional side a bit, as we can tell.
Well, and even today, just the first push out of this Canada Builds, or whatever we're calling it now, I think 5 projects across Canada, and only one is related to oil and gas or mines and minerals, and that's a copper mine in Saskatchewan. There was nothing.
Right.
I don't think there was anything else for mining or oil and gas in the first 5.
Yeah, there was 2 mining, one in BC and one in the Saskatchewan. Yeah, there was 2 of them, both copper.
And BC was really. I thought BC was the LNG.
They did 2 in BC.
Oh, okay.
Yeah, yeah. So the
Alberta again.
So this is maybe we can touch on a little bit the purpose of the flow through, or the idea of the flow through, and what the concept is. So obviously it has to be into critical minerals right now and in the mining field. So, why focus on that area? Maybe you can touch on, Shane, the credits that a investor receives because of their exposure to exploration.
Yeah, so that's a great question. And the answer comes directly from the term critical minerals. Like 5 years ago, those 2 words were never put together, critical and minerals. Now it's a term that everybody's familiar with, right across the country. Like kindergarten kids know the term critical minerals. And the reasoning for that is we really need these minerals. Like it's not a nice to have or a want to have. We're at a critical junction where we need more copper because the demand for copper is taking off. We need more nickel, and there's not a whole lot of global supplies of nickel that we have access to, and Canada is rich in nickel, but it's critical that we get it. Aluminum, same thing. Zinc, same thing. Magnesium, same thing. Like, we really need these minerals. We're at a critical juncture. So historically, the federal government gave a 100% tax deduction, which is quite generous, for companies to explore for these minerals. And in 2022, the recognition is we're not getting enough exposure in the exploration space into these projects. So they added a 30% tax credit on top of a 100% tax deduction. Now, that's important. And the reason why that's important is because the tax credit is a reduction of your income tax payable. So a 30% credit is virtually worth almost like in Alberta, like a 65%, or sorry, a 60% deduction in income. So it's worth a lot. So the government has gone from offering 100% tax deduction to depending what province you are, anywhere from 156 to 166 percent tax deduction to go after critical minerals. Not gold and silver. Gold and silver are not quantified as critical. Just, the ones that I'm talking about, copper, nickel, zinc, aluminum, are critical. So the government has made a real push to get people active in this space. And ironically enough, we're raising a little bit more money, but like everything in this country, the cost of exploration has gone up basically exponentially over the past 5 years. Like since COVID, like everything's more expensive, and that also includes the cost for exploration. So we're kind of, I was going to say we're kind of treading water here, but we're actually not even treading water. We're not raising enough to meet our exploration programs across the country because the cost of exploration goes up, and we're raising virtually the same amount of money as we have historically. So, we really need, a lot of money to going into this space, to build out the country. I mean, and it's everything. And you'll see it. I mean, like, how long does it take to build a pipeline to the coast? And what are the costs? Again, how much steel do you need? Like, it's, everything seems to be on, we're slowing down as a country to get things done. And, there's roadblocks to supply chain. We don't have access to enough steel or the minerals that, go along with the steel to build out these pipelines. So we really need to kind of beef it up. And that's where the government comes at this with now it's critical. We're at a critical stage. They're willing to pay the investor virtually what amounts to almost 80 cents on the dollar first year to participate in an exploration project. Like that's unheard of. Like, think about that. The government will give you 100% tax deduction on your investment off your income that you have to pay tax on, and a further 30% reduction in the taxes that you pay on the same investment dollar. That's absurd. That's never been available. And the one thing that's kind of unique about this is the government's doing that, and it's a bit of an echo chamber in the sense that nobody hears it. Like nobody knows that this exists. Like, you could ask anybody. You could ask anybody in any street corner in any city of this country, and not one person would be able to tell you that this exists.
Yeah.
And it's been. Go ahead. Yeah.
Yeah. You might not know the answer to this. You might. One of the issues we have with a lot of our clients is their OAS clawback.
Yeah.
If they purchase a flow through, does the clawback still exist? Or if the income is reduced to whatever the number is this year, $93,000 and change, does that absolve them of the OAS clawback by using a flow through, or is it still based on their total gross income they get the clawback on?
No, it will reduce the taxable income, and people have used flow through to reduce taxable income so they could actually get their OAS payout for years. The credit doesn't apply.
Okay.
Because credit is, because that reduces the tax that you owe, where the flow through reduces your income that you pay tax on. So a credit, I'll repeat this again, a credit is worth twice as much basically in this, Canada, which is a high tax jurisdiction. It's worth twice as much or more than twice as much as a tax deduction.
Okay.
It's quite significant.
Virtually when you add that up, with a clawback at 15% of every dollar you go over, coupled with a flow-through credit, it's almost a break-even game. You can lose all your money and be whole,
Yeah. And you won't. And you won't lose. This is a portfolio of 30 to 40 companies. If all of these companies go insolvent in 12 months, then we have bigger worries than this actual purchase. That means that it's an end of times event for the financial markets.
Mm-hmm. Well, I'm carrying on that then. With this being a big push by the government, like you said, there's not enough flow to fund the companies. Do we have enough good quality companies in Canada pursuing critical minerals that this is a good, solid, diversified investment for someone?
Oh, absolutely. Like I said, the cost of exploration has gone up. So the good quality companies, and here's just a little bit of a background. Since 2015, there has been a huge pullback in the valuations of mining companies right across the country. And that is because there's been a lack of support for mining in the country. So the companies that survived the last 10 years are really good quality companies. They managed to weather, probably the worst storm that they've ever faced. We've been supporting them every step along the way. And now we're at the point where, we have great relationships with companies coast to coast that are involved in really good projects, and we're financing them, and we're starting to see their valuations go up for the first time since 2015. Like, they weathered the storm, they made it through, and we're able to continue to finance further and further aspects of their exploration projects that are going to provide, lots of value coming into the future. So, yeah, we're not concerned about the lack of good quality projects. We're more concerned with not being able to get enough money to finance these projects.
So you're never in a position where you can't place the funds that you've raised. You've got ample opportunity to place investor funds.
That's right. That's correct.
Well, or ample enough quality to place the funds.
Yeah.
If you have too much money and you're starting to pick at the bottom of the barrel, that's a concern as well, but it doesn't sound like we're even close to that issue.
Yeah. So good. It's a great question. Back in 2006, 7, and 8, but in January, the market would open and there would be about $2.5 billion available for flow through. This year, by the end of January, there was about 50 million available for flow through. So you can see that, there's a huge discrepancy over time. And this all happened since 2000, I'd say 13, 14, 15 to today, where there's just been a lot less attention to our resource industry, especially our mining industry in Canada. And, we got to the point where they had to put the words critical and minerals together and start making obscene level amounts of tax concessions to get people to put money towards it. That's where we are today. It wasn't accidental that they put a 30% credit with 100% tax deduction to get people, to start doing this. That's not like some mistake. That's where we are. And it's not a great place.
Not even taking, we're not even getting enough from it to begin with. When you blanket vilify something, people grab onto that, and you have a pretty good generation of people who believe anything to do with the resources are evil and should not be, it should be just untouched. And here we are. And now, of course, as a country, we're where we're at. So,
and we compounded the problem slightly by, the country grew, to a reasonable level of population. And, we have issues around that. We don't have enough hospital beds in a lot of cases. We don't have enough housing. Our roads are very congested. So infrastructures, we don't have public transportation in most cities that is adequate. So we have to build this out. And resources are basically the building blocks to building these out. So, this is not a nice to have, this is a need to have. And that's where we are today. And then we also have aging infrastructure that needs to be upgraded. So it's, we're at that point where it is critical. It's at the point where the government is giving unheard of levels of tax concessions to get people, to recognize we're at a critical stage, and please invest into the exploration program so we can start developing these projects.
Well, they might have to couple it up into an RSP. So you get an RSP deduction, and you get the flow through, and you get the 30%.
You can actually do that within our project, because we're basically a short duration program. You can't do it the same year, but basically what it is you buy the flow through, you get the 100% tax deduction, you get the 30% credit. It rolls over to a mutual fund in a Section 85 rollover, typically within 12 to 15, 16 months. And then you can actually gift or donate those units into your RSP and get a deduction again using the Section 85 rollover into your mutual fund, or your mutual fund units into your RSP. It does create a capital gain on the sale, because that's called a deemed disposition, but it does allow you to use the same dollars to create those three events: flow through, credit, and RSP contribution.
Right. And we have done that before. We've also done it where we've donated the mutual fund to a charity.
That's correct. Yeah.
So that does work. Yep.
You mentioned short duration. So Shane, this is all typically done, a flow through is done within the same year?
Not in the same calendar year. No, it has to, the one major rule on flow through investing, it does have to, on a limited partnership basis, carry over a calendar year end. So,
okay.
So the rules around flow through are, if I raise the money in 2025, I have to place the money in 2025, every penny, and then I have to hold it over a year end. So you couldn't even consider liquidating the program until 2026. So those are the stipulations within the flow through regulations. So
based on calendar year, not months.
That's correct. Yeah.
Yeah, because they're purchasing pretty much all the way through the whole year till kind of cut off sometime between September and October, typically.
Yeah, typically.
What is this year's looking like for you for a cutoff?
For raising the money, probably October 15th, placing the money probably November 30th.
Gives us just kind of a ballpark. We seem to have a lot of clients who like leaving everything to the very last minute for this type of thing.
I would highly recommend this year not leaving it. I don't think there'll be a lot of availability of flow through later into the year. Good quality ones. Like, you can always get less than good quality ones, but there's a few really good quality issuers out there, and I don't think they'll be available after about the middle of October.
So if that's when you make your cutoff, or when you invest as an investor, when do you expect your rollover to happen, or when do you expect maturity typically? 2026.
Later in the calendar year. Yeah. So we'll be out of the market in October. We'll probably be rolling within 12 months of that date, like maybe 13 months.
Mhm.
So it'll be a 12-month, 13.5 month hole.
So, what do you want to tell us about the Maple Leafs critical minerals offering? Do you have any slides you want to share about
Well,
kind of maybe from a historical sense, or where do you want to go with this?
Well, I can talk about it in two different directions. The one that's near and dear to my heart is, I do think it's critical. Like, we could be focusing on gold, and there is some utility with gold and silver, precious metals, but I recognize that the country needs the critical minerals. And the importance to it are multifaceted in the sense that there's basically a social need, like housing, hospitals, schools, roads, public transportation. Like, this is what we need. There's also an economic jobs. It creates a lot of jobs. It creates a lot of wealth for the country, and that's important as well. And that was really, if you notice what happened with the oil and gas industry when that blossomed, from the 50s, 60s, 70s through the 80s, ups and downs, volatile, but it really created a lot of wealth, not only for Alberta, but the entire country. Everybody's benefited from our oil and gas industry, still do. And we're at that stage now. We needed this for the critical minerals. But, and oil was like, the entire country runs basically on our oil and gas industry and our critical minerals. I mean, we need them. Like when it comes to resources, we need our forestry, we need our fishery, we need our agriculture, but we also need our critical minerals, and we need our oil and gas. And the one area that's been neglected is critical minerals. That is the biggest area of neglect. That's why there is 100% tax deduction and a 30% tax credit attached. Now, you don't see that with forestry. You don't see that with agriculture. You don't see that with fisheries. And the reason why is because it's never been neglected. Like, there's always adequate money going into it. We've had a series of neglect over the past, I'm going to say 12 years, 15 years into this space, and we're at the critical stage now. So, I'm a little bit passionate about, we have to start doing this now as a country. We don't have to, but we have to. And so, we're talking about the social, the economic. You also have the political element of it. I mean, and I don't mean just with the United States. I'm talking about globally. Like, we as a country are rich in these critical minerals. So is China, so is Russia, so is Africa. But do we want to rely on China for our critical minerals, or Russia or Africa? Like, is that something that we want to do? Does Europe, does the United States, really, we are a country that's a safe haven with good environmental practices, with good regulations, pay our workers well. We do it properly. Now, do we want to hand that off to China or, Central Asia or Russia? Like, the answer is no. Like, we should not be neglecting our responsibility as a good global citizen, to get these minerals into the marketplace. And I think our governments are reluctantly on side with that because of that 30% credit on top of it. So we're seeing this for the first time where the demand for this is really starting to drive the activity. It's just not happening fast enough. So that's my role, is to go out there and educate people that, this is critical. This is necessary. We need this. And last but not least, like, there's no way on earth that we're not going to end up transitioning away from carbon to some degree. And that means that we need, electrical transmission and storage. We got AI coming on, and these are high intense energy demands that require these critical minerals. We're not talking rare earths. We're talking copper. We're talking zinc. We're talking aluminum. We're talking about how to transmit and store energy and get in across the country. Like, we're going to need it. Like, there's no ifs, ands, or buts. We're going to need this. So we're at the embryonic stage of this process, but we got to start ramping it up. And I don't think the 30% credit will last forever. What I do think is I think the government, once this activity starts really taking off, it will be reduced back to the 100%. But here's the nice thing about this particular opportunity now is most of the companies that we're investing in have been battered from they're all publicly traded companies, but they've been battered by the stock market itself. Their share price is woefully low, and they've been bouncing around the bottom here for a number of years, and any type of positive activity drives them up, and we've seen this from January. The NAVs on our January deals are quite strong, well over the issue price, because the stocks the companies themselves were so underpriced or low priced that they could only go up from there. And we're starting to see that. So the timing's actually quite good as well. Now, the one thing about a short duration program for flow through, it doesn't participate long term with the exploration program. So we made a decision to limit our exposure to the resource market with the flow through issue by getting out of it as quickly as we possibly can and giving the investors their money back. So we don't participate long term. So if somebody has a lot of success 2 or 3 years down the road in the program, we'll be extremely happy that we funded it, but we will not be participating in those gains 2 or 3 years down the road, because we'll be gone after 12 months out of the project. But what we did do is we did finance something that was really, really critical for the country.
Oh, well, you're touching on all my questions, Shane, and you speak obviously passionately about this. This is obviously a project that you're deeply involved in and concerned about. So you make a good case for people to invest. And it's a product that Dave and I have used for a few clients in our client base over the years. So we've been well aware of flow throughs, but the critical mineral side of it is I guess the uniqueness to it now, that that's where the push is coming from. I mean, we were involved back in the day when it was oil and gas exploration. So now it's, the critical mineral side. And I think Dave and I are probably in agreement. I mean, that's an area that, needs to grow and needs to be developed. And there's a huge demand on it globally. So yeah, it would be great if Canada could become a leader there. It'd be so wonderful for this country and all of us if that was the case.
Yeah, I mean, we're at that point where we have to actually make that decision. Are we going to become a leader in the exploration, development, and use and exportation of these critical minerals? Like, or is it a China-Russia show? Like, in that respect, and that's really what it's coming down to. Like, so it is imperative that, I think, from my opinion, that we start, exploring and developing our own resource bodies.
Well, I think he answered some of this in, your discussion. The world is going this way and needs these resources. And if we don't produce them in a way that the guidelines that Canada has to produce them, which tends to be a wealthier thing for the people who work in those fields and from an environmental point of view. So for those people who are quite environmental sensitive, either Canada can develop them and do it in an environmentally sensitive way under our regulations, or they can be done without a lot of those regulations in China and Russia. And if you're concerned about the globe or the global health, it doesn't matter where it's produced. If it's not done in a proper manner, it's going to impact us all. And so I think, that's why this decision is not just a decision based on economic factors. We can stick our heads in the sand here and believe we're doing the best by stifling all of this mineral development so that we don't do bad things to the environment. But it's going to get done somewhere else. You're just not stopping the growth of this. And if we don't do it here, we're going to have problems catching up. We're going to have problems having the right amount of supply to just grow our own country.
The underlying concept here is the investor gets rewarded massively for going along with it. Like 100% tax deduction plus a 30% credit is unheard of. And here's the thing, like just as you guys know, you're in Alberta, the highest marginal tax rate forever in Alberta was 39%. Now it's 48%. Most of the flow through that was sold in Alberta over the past, let's say 50 years, was predicated on a 39% highest marginal tax rate. So you got 39% of your money back on the flow through purchase. Now it's 48%, so you're getting 48% back plus a 30% credit. Like that alone is massive. Like that's a massive win for the investors that they never participated in before.
Yeah.
And here's the other thing. The oil and gas companies used to charge about a 20% premium on their existing share price. It's half that for the critical minerals. So every aspect about flow through today is better than it ever has been historically. And like I said, at the start, like most people don't know that this even exists.
Let's say a fund buys flow through offer or shares. Does that flow also flow through to the unit holders of a fund, or is it just the fund that gets the credit?
It has to be set up as a limited partnership. So like, just to put, a straight trust fund, they would just buy the stock out of the market. They wouldn't actually participate in a flow through.
Perfect. That's great. Shane, I think you've covered all the questions that we have, and I think you've done a great job of describing that investment, I guess, and the opportunities that lie there. So we really appreciate you guys taking the time to chat with us today. And how can we find out more about Maple Leaf if we've got clients that are watching this? How do we find you guys? Anything else?
It's Maple Leaf flow through website. You can come onto our website, read a bit about us, all our history there, all our results, the performance and all our funds going back many, many years is on there. You can just take a look and see what we're doing, how we're doing it, why we're doing it. We're quite, I'd say, passionate about doing it. And I know, from a historic perspective, we look after the investors as best we can. But like I said, I've never seen in my 20 years in the space flow through as attractive as it is today. And, I would urge people if they see some of this, just get take a few minutes and read up on flow through and see the benefits of it. From a historical perspective, it's huge, but from a present perspective, it's never been more important. They put
have calculators on there too. Do you not?
Yeah.
On your site?
Yeah, we do.
Something to go key in their own tax situation and see exactly the impact that you're talking about.
That's great, Shane. Well, thank you again very much for taking the time to chat with us today. If you want to learn more about us, you can follow us on our socials or head over to our website. Thanks again for watching this episode of Smokin Bulls. And guys, thanks again for being here.
Well, thank you very much for having us. I really appreciate it. Great questions.
Thanks, Dave and Tyler.